Hi everybody, this is Kel from Trade with the Boys. Now, we have more than 94,000 followers and people have been watching us very closely, looking at what are we sharing. We give very good levels, we give it way in advance, and people are watching us very closely. So if you want to join us, do come in, because now we are basically everywhere in the market. Now, if there is a way to lip read these two animals, I probably believe that the bear is saying that move over buddy, I am here. Now we're going to do a recap for 2018, okay, and we look into the important thing that we should take note for the coming 2019. But before that itself, Happy New Year to you, alright? Now, the Dow has to be supported at some point, and now the number that I'm going to give you specifically is at 22,908. If the Dow can stay above 22,908, we should see some temporary support here. Any breaking below 22,908 and closing below could send the market down again to 21,560. I'll come to that later, okay? So let's do a little short recap on the US stock market. Now basically, if you type into Google and talk about bear market, you can see there's a lot of projection in the market telling you that how bad 2018 is and what will be worse coming in 2019. This is everywhere. This one, you can go and do it yourself, your own research, but you can see something very important. Now, people have been asking me this question: how come the Dow Jones recovered in the last 2.5 hours? Now, we have seen the 1,000-point rally. We've seen a 600-point rally from the bottom. We see a 250 points closing yesterday. So what are all these numbers? Now, there is a reason for all this, because there is something that's happening at the back where probably traders won't know unless you're in the market, like this. You can see the Dow Jones basically was flat throughout the whole day, but towards the end of the day, there's a strong recovery. Okay, the boys came in a buy, and a strong recovery up by almost 300 points from the bottom of the 30-minute chart. So why is all this? Why is there a strong rebound towards the end, especially in the bear market condition? Now, this is the thing. Apparently, there is a theory that there's a giant stock rebound or position of $60 billion worth that is now doing the conversion from the options bonds to the equity market. So basically what's happening is that, right, there is some what they call year-end rebalancing that can be as big as 35 billion in the large and small caps and 21 billion worth in the index. So basically, end of the day is that this is the end of the day rebalancing, which people know like window dressing, or it's just basically funds exiting from their bond and option market and going to equity. Okay, so this usually happen towards the end of the day so that people will not know the position, and this had happened the last 3 days because they had to do this before the end of the year, and I believe that that is the reason why we see the strong rally towards the end of the day. Alright, but I think this is all over. Be very careful. Do not expect it to happen again in January. So if we look from the US market, we move to the regional stock market. There's something to watch now. Now, the GSIB, Global Systematically Important Bank. Now, basically, these are all the bank shares around the whole world, the important banks. You can see very clearly itself, right? The market from the highest point had dropped by 36%. That's why throughout this year, 2018, I've been very bearish on the Singapore banks. I've been keep on saying that the Singapore bank will have some more downside, and I believe that this is one of the reasons why I have been saying this. Later on, there's another bank I need to be very worried about, and that particular bank, you must take note of that, because anything happen to it could send this whole entire chart crashing down even lower. Okay, so look at now the comparison for 2018. The US dollar have been mounting higher. You can see that very nicely. They're mounting up the green line. Now, the US Treasuries, as you can see, went up the last 6 months. Yes, last 6 months. And gold came together. On the same note itself, right, you can see the S&P crash off. Okay, the S&P crashed off at the same period of time. So this tells us specifically why traders are moving their funds around to the bonds and the gold while taking away from the S&P. Now, the only thing that's a little bit worrying me is that this US dollar. Now, based on the US Federal Reserve expectation of raising rate, there should be the US dollar should go higher. But if the US dollar not doing that, and as a matter of fact keep going lower, this is going to be a very concerning factor. So traders, be very, very careful on this. I'll cover this the next time. Now, of course, we know the Shanghai Composite Index is the first leader that sent the stock market regional in Asia coming down, because basically in 2015 it was highest point. Let's just ignore this. But this is 2018. It went a point of 3,650, and from then on the market just keep on coming down with no recourse. You can see that it's pretty bad. And although the China economy is still doing well, the property market is still very strong there, but you can see the stock market have came off more than 25%. Now this is going to be very dangerous. Some players are looking at this. It's going to be a bottom here. Why, we won't know, but the thing is this, any breaking below this point without any cause of support could send the index back down to 2000, and it's something that we wouldn't want to see. All right. And overall, you look at it for the regional European market, from the start of this July period, after the sideway, they begin to sell off once again. So you have the DAX, we have the CAT, we have the FTSE, the IBX, and the UK index. You can see that everybody is coming down while the US market was going up this way. So this tells you that globally the market is actually having some problem, despite the US market going up on its own. So this is getting very, very scary throughout the whole world. Now, we know that we saw the one big rally, but usually big rally basically tells me that something is not correct. So what I did was that I did research for you for the biggest one-day gain since January 1st, 1970. These are all the biggest gain. And when I put up the biggest gain, I realized a pattern. Look carefully, right? I put in different colors. You can see that the 8th year and the year that have the 7th. It's incredible. Apparently, whenever this type of thing repeats, it's something very scary. And usually such a strong one-day gain actually is on those years when the market go into a big bear or into recession. So basically on technical term, it's just that it's more like short covering after a very heavy selling, forcing the buying to come in and stuff like that. So this is whereby it is turned to be called a washout. So only when the complete capitulation of the market is being done, then we might see the market finding a real base. But until then, I don't think we are near there yet. Now, the potential time bomb, yes, the Deutsche Bank. Now, why do I say that? Now, basically for Deutsche Bank, it's a very good bank, they have a very good network and stuff like that. But there's something very scary here. Okay. Now, apparently, oops, okay, I blocked it out. Oh, I'm so sorry. Now, the thing is this, apparently in the amount of derivatives that the Deutsche Bank has in their balance sheet, okay, they have a position or involvement of more than 50 trillion euro dollar. Now this is something not too friendly or a little bit too scary. Okay, we're not too sure what's happening here. I cannot be confirmed. I will get more data for you, but this is something I need you to be careful of, because the CEO says that the strong capital base and record liquidity values and levels are good, and if there's anything happen externally, they are fully prepared. But the problem is the stock market itself. The Deutsche Bank closing for 2018 is down by 56%. Now we're talking about a market like US basically doing pretty okay, and the bank, they're supposed to be okay, you know, but the thing is for the Deutsche Bank is down by 56%. Now this is covered by Bloomberg, not by me, alright? So let's look at the year-to-year basis. You can see that this is the high. Back then it's about probably $15, and now we are $6.97. Oh my goodness, this is pretty bad, right? Guys, this is something not very exciting, and this is going to be very worrying for traders. If anything happened to Deutsche Bank, this will send regional bank stock into a frenzy, and this is something that I'm pretty worried about. Okay, so the thing is, why the US markets kept falling? There is a reason. There are some reason, but I would prefer to have one particular one, that's federal. Now basically, the stock market has an epic fourth quarter reversal. It's something have not been seen before. For the first time ever, the S&P 500 ended the year with a loss of being positive for the first 3 quarters. Now think about this. If your first quarter, second quarter, third quarter is doing well, it is very natural progress that they will see a fourth quarter that is positive, right? Especially the year end, with bonuses and stuff. No, apparently not. The market actually went down for the fourth quarter. So what actually happened? And it didn't went by 1% down, 2%, it's down by 7%. Oh my goodness. So it doesn't make any sense. Well, if let's say based on the earning report, we shouldn't have this, but there's something that is behind the scene. Now remember, the US stock market after the Lehman crisis, where Barack Obama, okay, the previous president came in and they stimulated the economy with the power of money, which is the printing of money, QE1. From QE1 to QE2 to QE3, QE infinity, and beyond, okay, we saw the power of money propelling the market all the way up. Now, this is the period whereby the QE stopped for a while, right? Remember that? QE stopped for a while, and that's what market pull. But prior to that, whenever QE was involved, the market just keep on powering in front. Then after that, we have all these new stuff coming in, the whereby more what they call extended movement of the credit easing came in. That's why the stock market went up again. So now there's something very important you must understand. This is the power of money. Where it came in, the market reacted. So what if this money is no longer there or reducing? So apparently, let's look at the Dow Jones this last year. The Dow Jones on average, okay, per day basis in December, the most it went up is by 280 points to 265 points. Okay, that's a max. Only that particular day on the 26th December, we saw a 1,000-point rally. Okay, that is how it looks like. But you look at the December into a sell-off, we have big sell-off at 800 points to an average of 550 points. Now, this basically tells us people are selling in a December month where it's usually people are buying. Profit taking? Let me just look deeper. This is one other thing here. US loan funds saw 3.5 billion exodus, new record. So basically you can see that the usual thing from January to October was all coming in. But towards the last 2 months, we have seen a net outflow in billions of dollars. I repeat, billions of dollars. People are living from the market. Okay, and something very important. Let's take a look at the next one. This is the actual Fed redemptions. Okay, projection until from now till 2019 December. So basically, it's sort of right. This is the amount that the Federal will be reducing from their what they call asset balance sheet, because, well, they came in the money back then, now they're taking it back. So the figure on the rough estimated, okay, redemption basis is about $36 billion. Now think about this, $36 billion removing from the market. All right, from this point, from that point, I'm not too sure. But this is not going to be healthy, and this will probably leading into the reason why these sellings are in the market, and reason why we are having this type of fourth quarter losses, right? This is something that you must take note of that as a trader. Okay, so now let's look at the stock market to understand this better now with some charts after some fundamental aspect here. So let's see the S&P 500 first. Now I have mentioned the video 2352 is a very important support level which the market did. The midpoint is 24.25. The market did that again brilliantly, and I told you that 24.99 is a very critical level for a support and resistant, and apparently the S&P closed above it. Now, of course, this closing above it could symbolize another recovery all the way here to 2646. But because this movement came in due to the pension funds potential redemption back I showed you earlier, this may not be the truth. So tomorrow will be the key point. Yes, tomorrow when the market goes back to normal, we should see things really enveloping, showing us what to do next. Now, if you look at the Dow Jones chart now. Okay, the Dow Jones chart, we mentioned that 21,560 is a very important support level. Brilliantly, it stops there. We mentioned that 22,234 is a very important second level, which the market beautifully stops there. Excellent, right? And we mentioned again, 22,908 will be a very important level to watch again. So as long as the market stays above 22,908, we should be pretty okay. The Dow could be heading towards 23,581, the midpoint between 24,255 to 22,908. Now, if the market goes up, that is all good. But if the market comes back down and close below 22,908, there could be a sudden sell-off back to 22,234 level, right? Traders, you have to watch because we are still not out of it yet. Okay, we are still pretty much inside the market, and traders, you just have to be very careful. Okay, now if you look at it here, traders have been asking us a question. So why do we focus so much in the stock market? Because there's a lot of money to make. Seriously, our traders are doing very, very well. They are doing very well because we have statement to prove like this, whereby traders making this type of money on the different set of accounts over the last 2 to 3 months. So guys, we believe that our PSV3 system, okay, is going to help us and make a lot of money, and we want you to come on board and be part of us. Okay, we have another preview coming this in 1 week's time. So if you are free and you're in Singapore and you want to see how we do it, come on and we will share this live with you. Till then, this is Kel signing off. Once again, Happy New Year to you. Goodbye.